Similar to a Fibonacci extension, a Fibonacci time zone can still be used effectively with the initial reversal and retracement in the early stages of a potential large trend. It is often possible to use the duration of a Fibonacci extension's base trend to define the initial interval of a Fibonacci time zone. Then, similar to fixed time cycles and intervals, cyclical lines can be extended to the left to look for the preferred characteristic of important features taking place at past intervals, such as clear swing points and continuations. Since this is an uptrend filling in a gap down, significant events at the first three intervals are bearish reversals and bullish continuations. If there was no bullish surge in March, there would be interest in a bullish reversal and bearish continuation as the significant events of interest heading towards interval 5 in mid-April. Since a bullish reversal happened well before mid-April, the significant event of interest was the possibility of a bullish continuation or bearish reversal towards interval 5. Now there is a similar situation at interval 8 that has added resistance potential from the intersection with the trend line. Even if this resistance is surpassed, residual resistance can remain up near the 3.618 extension level into early July. Remember, interval lines from any time analysis technique approximate the time of likely significant events. These events can take place directly at the time of the interval line or slightly before or after the interval line. The further away the chart trades away from an intersection of price and time, the less likely there is to be influence from that intersection. In this case, less potential for a downswing at the 50 boundary. The further away price trades from the intersection after the late June to early July period around the 8 interval. The double top that takes place far from any interval line demonstrates how time analysis isn't a complete guarantee of covering all significant events. Price action at major areas like the 50 boundary should still be watched carefully at all times. Interval lines merely highlight when significant events are theoretically more likely in the context the intervals were based on. Early November is a wide area in price and time due to the additional influence of the 13 interval and the crossed trend lines, along with the mid-40s range that was the site of the bullish continuation range in late June. Naturally, attention was focused on the significant events of a bullish reversal or bearish continuation with price falling towards the 13 interval rather than rising or trading flat. Since the double top was a large-scale reversal, the Fibonacci time zone began to reduce in effectiveness during the progression of the new downtrend and later uptrend. Directly defining the initial interval from the first half of the double top is an obvious option once the downtrend establishes by October 2019. It would be unrealistic to capture the exact time of the bottom, but the approximation is quite accurate from a long-term perspective, with the drastic increase in support at the old gap down fill nearing the 40 boundary and the intersecting trend lines near the 34 interval. A Fibonacci time zone goes up to 89, but it will be rare to use the intervals past 21 in most cases, especially when there is a major trend reversal of the trend the Fibonacci time zone was based on. The later intervals after 21 are usually only used in cases like this, where a small initial interval starts a large trend. Even though swing points in the 2019 uptrend covered a slightly wider interval with the two downswings of the double top, interval lines are not capturing clear features in the double top downtrend, which is more important. Once a major feature like the early 2020 upswing forms, it becomes a target to place an interval line through. This is possible with a wider interval using the early December downswing and second downswing in the double top. That allows the later interval lines to be used effectively with the uptrend into 2021. Moving the zero interval line to the first downswing of the double top produces similar results because the target of getting a later interval crossing the early 2020 lows is achieved.